Okay. So as I told you, delta, if you see, if we come to the option chain, so if you want to, if you come to any strategy builder, so in Sensible, by default, he'll be giving the delta. Okay, this is, here is the delta. Okay, so say, as I told you, if the Nifty is at 24,857, so at the money call option would be 24,800, 850, right? So 24,850 is having a delta of 0.56. See, delta can range from 0 to 1. Okay. And for put options, it will be in minus. See, minus indicates, so you can see here 24,850 delta is minus 0.44. So that indicates that, see, if market, if you have bought a put option, and the market goes up by 100 rupees, in this option, you will lose 44 rupees. I will show you an example. Okay. See, let's see if you if you say that market is bullish and if you want to buy a option, okay, and if you buy at the money option, if you buy it at the money, you can see here the probability is only 36%. Okay, so as and when, like if the underlying asset moves from 24,850, say suppose if it is moving from 24,800 or 950, the delta of this strike rate will be keep changing. So as and when the underlying asset moves on your direction or upward in the call option, the delta of this particular strike rate will not be the same. Okay, you need to understand 0.56 is not intact. It will be keep changing. And delta can change with many parameters, not only by the underlying asset, but also with the volatility index and the implied volatility. We will talk about the implied volatility and the VIX as well today. So here, and you can say someone, Venkatesh was asking, sir, why we need to buy delta of 0.7 and 0.5. See, if you buy at the money options, the probability of your winning would be 36. What happens if you buy out the money with a delta of 0.3? See, you can see here the probability of profit is decreased from 36% to 23%. Okay, a lot of people make mistakes. Okay, this may be lucrative. I'm not talking about the percentage of return. I'm talking about the absolute return. Okay, so if you are a buyer, option buyer, you should always look at the delta. What is the probability like? And it comes with the time frame as well, because the time is very important. If the time is not within the time frame, if the direction is not going as per your prediction, the delta, the theta comes into the effect. Okay, so I will explain you about the theta as well. First, let us understand the delta. See, if you are going long with 0.5 delta, if you want to uh, increase the probability, okay, say you can say if you buy only an option at the money, and if you're not sure, if you want to collect any of the premium, what you can do is you can just collect some of the delta by selling an option. Here, if you see, if you sell one of the options with 0.3 delta, okay, so you collect a premium. Here, you'll collect a premium of 44 rupees. Here, you can see here, the probability will go up from 36% to 44%. Okay, now the delta of this, okay, you can just see here, it will be 0.34, where it will have a probability of 44%. Okay, the intrinsic value is 812 and the theta is only 10 rupees. And if you don't sell it, the theta is 33, because If you buy only option at 111, the theta value, because if the Nifty is moving slowly, we can say, okay, slowly if it is moving, as and when the time value is going up, so the theta is nothing but, we will see here, okay, theta measures the time decay of an option value. Time decay of an option value is like, if at all, if the market is consolidating, so the value of this 111 will start decreasing because of the time value. That is what we call it as a theta, time value depreciation. Because you should understand, on the date of expiry, most of the option, 95% of the options, whatever you see here, in and around, see all this 40 rupees, 60 rupees, 20 rupees, most 95% only add the money, and in the money options will remain numeric, and all other will become zero. So that is the theta effect. Like, whenever, say, suppose market, if you buy this 25,000 call option at 44, so to make profit here, you need to, the Nifty has to go over and above 25,044. You can just see here, 20,000, 25,044 and above only you will make profit. Okay. And if it comes to add the money, okay, that is where the gamma effect comes in. So you can see here, the gamma measures the rate of change of delta. Okay. Rate of change of delta means, so whenever what I said is this 0.3 delta will increase if the market moves in your direction. Say, suppose if the market moves on the date of expiry to 25,000, then it will be at the money. This delta were from 0.3 with the same strike price. At that point, the delta of this particular strike price will not be 0.3. It will change. It will change to 0.7, 0.8, maybe sometimes 1. When the delta of the particular option, you can see here, becomes 1, that's where you will have this gamma effect. Measures the rate of change in delta. If gamma effect shoots up, so that is where the delta will be at 1. For every rise of 1 rupee, you will have 1 rupee rise in an option. That is where you might have seen on the date of expiry. Okay, you might have seen the gamma effects comes when there is a sudden increase in the delta value. If there is a sudden increase in the, you might have seen like sudden change, suddenly if the market shoots up by 100 points, there will be a sudden change in the delta value of that option. And there will be a huge demand because there will be no premiums attached to it. So you can directly go long in Nifty without actually doing futures. So just for 40 rupees, 50 rupees, say around 5, 5, 20, for 2,500 rupees, you can directly go long in Nifty. And for every point in Nifty rise, you will have that 1 rupee movement in the options as well. Okay. So usually you will find this gamma effect in the expiry day. That is called as gamma boost or gamma effect. So gamma, whenever the gamma effect is done, usually it will be a threat to option sellers. Okay. So here, if you are buying, say, suppose deep in the money, you don't have to really hold that, because very many people invest a lot. See, if you buy this 24,500 on the date of expiry, see, if you only buy delta with 0.9, you can see the probability of profit is 48%. So that is where, for option buyers, you need to have two things in mind. Okay. You should look at the VIX first. What is the volatility index? Because that is the major factor which will have effects on the directly on the option pricing. Okay. So next is the Vega measures the sensitivity of the option pricing to change in the implied volatility. So let us understand first what is implied volatility. Okay, then we will understand what is the Vega. Okay, implied volatility in option represents market expectation of the future price fluctuation. It is crucial component for option pricing model. So option pricing model is not only dependent on alpha, theta, gamma, vega. No, it is associated with implied volatility, and implied volatility is also associated with VIX. We will understand the VIX also. First, let us understand the implied volatility. So implied volatility can change rapidly in response to the market events. So you might have seen whenever there is a huge event like budget event, yeah, elections event, or if there is any particular results of the company, the implied volatility will be very rapid. When the implied volatility changes when the VIX changes. Okay, so market, it is a vital condition for option traders and investors. Higher implied volatility indicate greater uncertainties. Okay, when the implied volatility is higher, so the uncertainties are higher. That can lead to a high option premium, while lower implied volatility will suggest less uncertainty. Okay, so in the same of like how VIX. Trader often compare implied volatility to historical volatility to assess whether the options are relatively expensive or cheaper. So implied volatility, by looking at the implied volatility, you can gauge whether the option price is at a cheaper price or it is at a higher price. So usually many of you don't consider the VIX. So let us understand the VIX so that you will understand the implied volatility as well as the other option. VIX is always referred to as a fear gauge. Okay, it measures the market volatility expectation. As you might have seen in my group, I always observe the VIX movement as well. Can you mute? Yes. So VIX is referred to as a fear gauge. If the VIX is high, the fear is high in the market. That is where, sorry guys, 1 second. Okay, VIX reflects the market sentiment and it can impact option prices. Option prices will change irrespective of market moving upward or downward. If the VIX is low, an option premium from 100 rupees, if the VIX increases, as per the percentage of the VIX, the option price also increases because there is a fear indications and the premiums tends to increase when there is a VIX high. And when the VIX comes down, if the market is at same condition, the premiums are bound to come down. So how to interpret VIX is like, if you see an higher VIX, indicates that the higher volatility in the market. And the VIX is low, suggests the lower volatility in the market. Market sentiments is high VIX can signal fear, while low VIX can signal low market movement, right? I will show you how actually the VIX. See, if you see my screen here, okay, I always have Nifty, Bank Nifty, and VIX indicator. So many of you will not go through the VIX chart, but it is always to have that where exactly is the VIX. You can see here, every morning, if you see, there will be a huge spike in the VIX. You can just see here today also, the market VIX was, it came to level. Nobody sees that. Okay, but the option prices you might have seen in the early morning as soon as the market opens, the VIX is at 13.2 and the low is 11.7. It's not only about today. If you can see on the every day morning, you can see the VIX is 12 and the VIX is 12.8. Okay, almost here also you can see on the morning as soon as the market opens 13 and low you can see. Here you can see the spike in the VIX 13 and low is 11.2. Okay, it is not visible to naked eyes, but it really matters. That is where we enter the market at after 916 or 917, because in this quick spike, the option prices also will get settled. You can just see here the VIX movement spike. So the option prices moves very rapidly because of this VIX spike. Okay, so that is where it is very important. So what VIX range is good for trading? Okay, so now the VIX is at 12.8. You might have seen when the event was there in the budget and in the election time, the VIX went to 15, 16, 17. In COVID situation, it was 60, more than 50, 60. What happens when the VIX is high? The uncertainty is very high. Either the market can move very rapidly on either direction. So there are four scenarios you need to understand according to the VIX. When the VIX is going up and market going up, okay, so that is where the call options premiums tends to move higher. Okay, so and the VIX coming down and the market is also coming down, the put options premium tends to move very faster, and the VIX also will affect the implied volatility. Let me show you here the implied volatility how. So if you come here, you can see here the option Greeks. There is an option of reset IV. Okay, you can just calculate the strike ways IV. If this particular IV is at 15.9, and if you see, if you choose any of the out of the money, it will be 13.3. So if the implied volatility is higher, that price, that option price is tend to move. You can just click multiple options and see what is the IV of that. Okay, the IV spike happens whenever there is a spike in VIX. VIX will directly affect the implied volatility. You can just see here implied volatility 13.3, 15. If there is a spike in IV, all these parameters will change. If you can increase, if the implied volatility changes from 15 to 25, this particular option 24,800, you can just see here it everything, the delta also changes, the theta also changes, and the decay, the gamma also keep changes. If you decrease it, you can just see here the delta of particular option 24,800 will also change. You can reset the IV. Okay, IV, if you reset it, all these things are same. Sometimes what happens is whenever you have a, say suppose 24,800 is having a 0.64 delta, this says that whenever the Nifty moves up by 100 points, this option should move up by 64 rupees, right? Let us see if the IV, if there is a sudden IV crash. Okay, if there is a sudden IV crash, the delta of the options will increase. And in the meanwhile, if the IV, there is a spike, okay, because of many parameters, because of the VIX. So if it is going against your direction, the delta will come down. If it is going in your favor, the delta of the particular strike rate will increase. I hope everyone is following. If you have any doubt, you can just raise your hand and ask me. So whether it is important or not to make to be an option trader, this is not that important, but academically you should know what are all the parameters that is affecting the option price. Without, if you are an option trader, because many professional traders, like even I depend on VIX very much. We can, by looking at the VIX, we can actually calculate the Nifty range for weekly, monthly, or yearly as well. Okay, so there is a formula where you take the square root of the days, and if you multiply it by the Nifty, you will get a range which is the exact. It is already defined here. Okay, say suppose if you have, let me show you how you can. If you sell both the options, that is what is the straddle, right? So you can just see here, this first one standard deviation, two standard deviation, this will be calculated on the VIX itself. If the VIX is high, this one standard deviation, two standard deviations will go apart, okay, and you will get a wider range. And if the VIX is low, okay, you will get a very narrow range. So that is why when the VIX is high, we always, the option sellers becomes active, okay, and the VIX is low, option buyers will be active. So you should have always a combination of buy and sell, because VIX will be changing continuously. That's very important, whether you are actually in a right track or not. Any event, binary events, we can call it as a binary event, in the sense you never know, the market will make it or break it, right? So like elections or in the budget events as well. So you never know, the market move upward or downward. Well, before the event, if you plan very well and if you go for a long straddle when the VIX is low, in this budget, I will tell you, okay, whoever, the VIX was at 11 and 12, the options were very cheap. So even if you would have bought any of the options on either call option and put option and leave it, okay, well, before the event, on the date of event, you know that VIX shot up very well, which shot up by 14, 15, 16%. And the option premiums you have invested around only 62 rupees and 42 rupees. This 62 rupees, you can add this. If this option goes to 500 rupees or 400 rupees, you will make unlimited profit. Now also, if there is any bubble, like that is where you can see the long straddle, you can see the probability is 42%. And if it is moving by 1%, 1.1% down, the profits are unlimited. And if it is moving by 0.6% as well, okay, 25,000 and above. Okay, with this expiry only, we'll take an example. If you buy both call option and put option, you can just buy this and this. It's not necessary that you should buy only at the money options and all. So if you are expecting a huge movement, okay, plus or minus 0.8% or 1%, at that point of time, it is not good to go for short straddle. You should go for a long straddle. Okay, so you can just see here the combined premium, the maximum loss would be 3,670. Okay, that is what you have paid the premium. Where the profits become unlimited, the probability of the profit will be 41%. So what happens if the market comes down suddenly tomorrow, or for this expiry, says the 1st of August, if market comes down due to it, now there is no events left. I think the VIX is, that's where it is very low. Say suppose if market comes down to 24,600 or 24,500, 24,480, you can just see here, you will make 3,981 profit, which is 100% of your investment. In the same way, if the market shoot ups because it is in a range bound. If 930 is crossed, we are expecting market to move up by 25,200 or 25,300. So even if market goes up by 25,100, if it is 1% up, this long straddle will give you again 2,300. At that point of time, you can just unwind this. This will not become zero, and you can just book a profit. So when the VIX is down, don't go for huge selling. If you sell all these two options, so that is where you will get a different range here. You can just see here. Within this range, you will make money. Over and above that, it will be a huge loss. Unknowingly, many people come to option selling and they sell the options when the VIX is low. And if there is a VIX spike, they will lose tremendously. So that is where it's very important for you to understand what are all the things which is affecting the market. So the VIX is very important. The implied volatility will always changes as per the VIX. As and now option Greeks also, it's good to know that delta is measures the sensitivity of the underlying asset. Whenever there is a slight movement in the Nifty, you will have the delta change. So delta 1 means for every 1 rupee point, you will have 1 rupee movement. See, usually you can see here, the delta is 1 in deep in the money. You don't have to invest 1,884 rupees to have this. If you want to directly buy Nifty, you may have to, you can go for this kind of options. If you see here, coming down, you'll get 0.91 data, 0.91 delta. You can just long this. And if you want to have, if you feel that there is a huge risk of 393 rupees because 9,800, you can create a spread. Okay, if you just sell any of the option with 0.6 delta and all, your delta will come down to 0.3, wherein you will make limited profit and limited loss. Okay, so any doubts till now? I hope everyone is following.
No
Okay.
doubt, sir.
Okay. So now next, and let us understand the open interest as well, because this is also one of the important factor which you should consider. Where exactly the open interest are? What is open interest? See, open interest is the total number of outstanding option contract in the market. Okay. Total how many outstanding contracts are created. Say suppose can be used, open interest can be used to gauge the market sentiment. Okay. I will show you how the open interest. Okay, done. Let's see here. Okay. So you can just see here open interest. Okay. See, these are all the open interest for 1st of August. If you click on here, see, this is the strike rate is 24,900. You can just see here the call OI change is 14.99 lakhs. That means that there are 14.99 lakhs contract in 24,900 call, and input it is more, right? 16.42 lakhs. So there are more put contracts. See, when the open interest is created, if one contract, if you buy, one person will buy and one person will sell, that is where the open interest is called as 1. Okay. So whenever how many contracts are built? So when for every seller, there is a buyer, right? So there are 24,900 put selling is very high, which is 16.42 lakhs. And you can see here the same will come to here 24,900, the call option. You can, by looking at the graph itself, you can understand that there is a more put writing. That means The support is at 24,000. What is the next open interest? Next open interest, you can see here 24,850. There are more put writing. There is no call writing at all. Okay, this clearly indicates that market is going to be bullish. Okay, how? Actually, you can see there are more put writers here. There is no call writer. If you see here, there is a call unwinding minus 1.91 lakh. So those who were short, okay, 24,800 call option, those who were short, they have unwinded the position because that is where it will show the negative value. If this indicates clearly the market levels, for every level there is a different open AI. So if you see here, the highest open interest is again 24,400, 24,000. When it comes to call, you can just see there is an unwinding in call OI as well of 25,000 call option also. There is a huge unwinding seen here. You can just see here, and every minute it will change, every second it will change. This does not indicate that you should always go long. Every 5 minutes it will be keep changing. You can just see here last 5 minutes. Okay, last 10 minutes, what is the this one? Last 15 minutes, what is the change? Last 30 minutes, what happening? And you can just see here. This is the live one. What you see here? This black one. This shows there is a decrease in how much it has been decreased. So you can see here earlier how it was. The call open interest change is minus 1.7, and the call OI at 330 was 30.21 lakhs. Okay. In the same way, you will have for different contracts for next month. Next week contract also. There are a lot of call writing at 25,000.
Sir, you mute from your end. Hello. Raju sir,
Yeah,
You you can
you
request
just
him on.
mute from your end.
No, no, in
Yeah,
spite of that, he's
okay. I kept it open just because if someone wants any doubt.
Oh, it's continuously happening. Continuously happening. Please.
Okay. So this sensible is giving a very good data. Okay, for last 5 minutes and all. What is the percentage change? You can just see here how much increase. See here if there is an increase or decrease also. Everything you will see it. So usually for any strategy building, we will look at the open interest. It also tells us what is the support and resistance, where are actually option sellers or option, more number of contracts are open. Okay, so if you see on monthly basis also, you can just see here. See, people are sitting here at 24,500 put. There are huge open interest here. Okay. And on the higher side, 25,000. So 25,000, there are lot of straddle, we can say. If there is a equal number, almost equal number of people, they have sold, call and put. Okay. So ultimately, if someone is selling, someone is buying as well, right? So that is where the option buyers make losses many of the time. Okay, so without knowing all these parameters, they will just keep buying the options and waiting for the market to go as per their direction. Usually, it will not go as per your direction. You need to understand the mathematics if you want to come to option trading, right? It's option trading. It's all about how much premium you give and how much option premium you collected and what is the range you need to calculate and then build your strategy. So today I will show you how exactly you can build multiple strategies. Okay, delta neutral strategy, we can call it as, like how to create delta neutral strategy. Okay, so let's quickly move on to okay, in today's as we learned short straddle in the previous class. Okay, So we will see the short strangle. What do you mean by short strangle? Okay, short strangle is selling OTM put and call at the same time. It's not at the same time, you can call it as, but same time will give you the non-directional view. So if you sell it at OTM call and put, that will become a strangle. Usually identify the support and sell put. How do you identify the support? Either you can look at the open interest where highest open interest is created, and again the put OI interest and the call open interest. You can sell those two call and put and create a strangle. Okay, and keep at least 400 points away so that you will get a wider range. When the VIX is high, you can still go for a higher range. So it is easier to do in the last 2 weeks. Better to do it in last 2 weeks because you will get most the time. The time value will be high. The premiums you will get more high. Long-term strangles is good and is a good idea. Okay, let me show you how actually you can create a strangle. If you come to strategy builder here, you will get neutral strategy. In neutral strategy, you can see here short strangles are ready-made. You don't have to really opt for. Or if you want to build a strategy, I'll build it and show you. So if you want to create a delta neutral strategy and again adjust the strangle as per the delta value. Okay. So let us see, if you want to keep the delta neutral strategy, all you have to do is just look at the open interest and the delta value. Say suppose if you, what I said is like 24,850, right? So as I told you, it is good to create monthly 2 weeks. We'll keep 2 weeks. You can create in 14th August or 22nd August or 29th August expiry. So let's take 29th August expiry and see what are all the premiums. So 24,850 is here. Okay. But highest open interest is in 25,000. So 24,900 if we take it. Okay. 400 points below. Okay. 1, 2, 3, 4. So highest interest, open interest is at 24,500, right? You can sell a put. It has a delta of 0.3. Now, if you want to make it a delta neutral, you sell a delta of 0.31, near to 0.31 where it is. You can just see here 0.3 or 0.31. If you observe, okay, if you sell the same premium, almost the delta will be same. See, if you sell a 0.31 delta, it is at 182 for put option. Okay, for a 182, if you see here 187, it has also has a positive delta of 0.3. So what happens if you make a delta neutral strategy? See, let us sell this 25,000, or you can just sell whichever has an open interest, but we'll sell this 25,200. So 400 points above the call option and 400 points below the put option. So if you, by selling these two, this is how the payout chart will look like. Okay. So you can just see it is almost covering the 2 standard deviation on the downside and almost 2 standard deviation on the upside. The probability of profit as 61%. So 61% is a good amount, right? And you will get a range of plus 3%. So wherever the market, Nifty, if it is moving from 24,850 today, right? Okay. So whatever premium you collected, so 9,800. So we can call it as 180 plus 209. If you calculate per one lot, if you by selling, you have collected 9,813 rupees is the maximum profit. So as and when the time, see, suppose if you have created this triangle today, okay, so if a day pass out, so if market is not moving anywhere, so this is how you'll be in a profit of 509. Even if it slightly moves up or down, you'll be still in a profit, because the Nifty, this delta will be keep changing. It loses its value. If the market goes up, okay, this 182 rupees premium will be almost one, it will come to 170. If market moves up by 100 rupees, this option will lose 30 rupees. So 180 minus 30 is 150, 152. This option will come to 150 and this delta will increase because it is moving in, but not increase to an extent. This will increase only, it depends upon the time as well. There are a lot of parameters as I told you. If it is next day, you can just see here profit and loss statement. You will understand. Okay, 24,000 as I told you, it will be at 139. This 210 rupees premium will go to 247. Okay, so that is where you will have the target price here, the entry rate and last traded price. How much profit you will be making whenever as the days increases. I will show you how. Okay, so here you can see here Friday, Saturday, Sunday or Monday. By Monday, your profit will come to 404 rupees. 414. Why? The option which you sold at 182 has lost the premium, okay, and it came to 134. And the option which you sold at 210, say, it has gone up by 241. So here 20, 30, 40, 30 rupees is the gain, okay, in the option premium. But how much? Here you can see the theta decay, we call it as from 44, 54, 64. So you have gained 50 rupees here and you have lost only 30 rupees. So 20 rupees is your profit. That is where you will be having. So in the same way, if market again comes back to the normal, you can just see here, both the premium which you sold at 182 and 210, both came down. This we call it as the theta decay. So theta, you can just see here how much is the theta and decay, 31 rupees. Okay, so that's where if this straddle works in the sideways movement or in a range of plus or minus 1% if market is consolidating. I'll tell you, market 70 to 80% of the time market moves sideways. Don't look at the intraday volatility up and down, but it will be like most of the time you can take the historical data. 70% of the time market moves sideways and it has a range. You can calculate this range by VIX. You can, but if you know the VIX, you can calculate the range of the Nifty for weekly, monthly, or 2 weekly. You can just do that and create a strangle for long term so that you don't have to trade on a daily basis. Okay. So how actually this is called as just delta neutral strategy, 0.3, 0.3. If you want to create more strangles with 0.2 delta as well, you can go and sell here 0.2 delta and 0.2 delta, 0.24 delta. Okay, this will be a multi-leg strangle. You'll have a payout graph like this. You can touch this 2 standard deviation. The probability increase, right, for 65%. So, so you may ask me like, sir, this maximum loss is unlimited. What about this? If there is any black swan events, okay. So you can manage the risk by buying an option with a delta 0.1. Okay, or you can just look at the where exactly is the open interest, highest open interest, which will where the option put writers are sitting. You can just see here 23,500 as the highest open interest here. You can just buy these options and control your loss, and the margin also you will get benefits. So you can just see here downward we have covered our loss, so maximum 29,000 will be our loss. And if you come here with same 0.1 delta, you can just buy these 2 lots and cut down your loss. So this unlimited loss came to limited. So many people without knowing all these things, that option selling is very risky. There is an unlimited risk. So until and unless you know how to manage your risk, you cannot come to the market. You should know to manage your risk. So cut off your losses, if at all, if you are having huge position, because if you are going for one or two lots, that's fine. If you are creating any positional strategies, anything may happen. It's like taking a life insurance for yourself, right? So it's like, even if you are in the market, you should know how to hedge your positions. You can hedge your positions in multiple ways. Okay, not only that, you should go hedging with a monthly option. If you have monthly option, you can go for a weekly option to come out of that uncertainties. And all of a sudden, like COVID situations or Lehman weather collapse, like black swan event. Okay, so you can cut down. Now, wherever the market goes, so your loss is limited. You will not lose more than 30,000 for 74,000. Even though, yes, there is a 50%, 41% is the one where the profit range is only 16%, but the probability of profit is 61%. Okay, risk to reward, if you see it, it is 2.6%. Okay, in this way, you can create intraday straddles when the VIX is high. I usually run a lot of strategies, which is time-based strategy. Initially, morning itself, you will enter the market when the VIX. Usually, that's where for straddles and strangle, we use 9:20 as the time, or 9:16 sometimes, or 9:30 after the market is settled down. Okay, today I will show you one strategy which I have deployed it live. Okay, daily I'll be keep deploying. I think you might have seen my straddles and strangle strategy running daily, enjoying the theta decay if the market is moving sideways. And always I have a buying strategy also. If market turns trendy, I'll make money if the market, because nobody knows. To be frank, I'll tell you, no, don't believe. See, it is only an analysis where we can predict, we can analyze a market to a certain extent, but prediction, no. If you see today's market, it was a what a market today. So all of a sudden, you can just see here. Okay, here it was very clear. It gave a buy indication. It crossed the pivot and upper pivot. See, you see, I will give this code. You can. This is a. I use this. This is the professional which I have written. If you see these levels will give you a clear indication. You can just see here H4 level. As soon as you can see here, again, here H4, there is a rejection. Here H4, there is a rejection. Here H4, there is a rejection. So at this, we call this as a platforms. So whenever there is a buy in pivot, there is a breakout in pivot, immediately you can, that is how we analyze the market. I study the market, the technical analysis. So this is the first target. If it crosses above this, that is where this and above this will be the next target. Most of the time it will hit. Okay, but at this point of time, you need to be very careful. For every for pivot, this we can call it as usually normal retail people, you can be using the support 1, support 2, support 3, support 4, support 5, support 6. This is R1, R2, R3, R4. I use Camarilla. This is the CPR range, central pivot range. So usually the demand and supply will come to know very accurately by using this CPR and with different levels. Okay, if you backtest this and see wherever there is a rejection in H4 and H5, usually it will bound to reverse. Okay, in today's market, you can just see here, it was full trendy market today. It was, even though those who entered the straddle here, this upward stop loss is triggered, downward stop loss is triggered, both call and put. I will show you today. I had a nifty straddle as well. I will show you today's trade. Okay, so you can just see here in the previous class, we developed one strategy, B1 strategy. You can just see the trades. Okay, 916.59. It bought at 380 and exit is at 410. Okay, just imagine what is the points. 30 points. 30 points in what? In 1 minute. 917, 918 is the exit. It made 901 rupees profit. Okay, again it took a trade at same. It took call option at 916. First trade was this one, 916 to 16 seconds. It made 300 rupees. Again it moved up. I'll show you here. Here it took and the stop loss was it, and again here. That was in Nifty Bank. You can just see here. Oh my God. Today's market was so volatile. Okay, here it entered. Within this 920, this moment the trade was closed. Okay, in the same way, I have deployed one more strategy, which was Bank Nifty selling strategy. I deployed this at 925. Okay, due to some error, due to immediate stop loss hit. You can just see here it sold 150 rupees and 152 rupees. The exit price was, the stop loss was hit at no time, 185, 185. And then I switched it to manual and I just changed the things, but it ultimately came to the profit. Because whenever there is a low VIX and the market is behaving very violently like this, okay, all your stop loss are bound to hit. So that is where you have to choose the strike rate, and the VIX is also is very important. If the VIX is coming down, your selling positions should be squared off because by that time, if the VIX is falling down, you will already have a decay in it. Okay, now let us see how to create a strangle, and we will see what is the back-tested data, how strangles might have worked with a delta neutral strategy. Okay, I usually have already Nifty straddle here. Okay, straddle, you know, selling ATM call and put in the last, usually I run this on a daily basis. Okay, let us create a strangle today. Which one you want to create? For creating any of the strategies, suppose you have to come to new strategy here. Okay.
I have one question, sir.
Yeah.
How to create delta neutral strategy automatically means adjustment should be get automatically done.
Yeah, you
It is possible or not? It is possible or not?
It is possible. If you want to create delta neutral strategy, as I told you, you don't have to look at the option delta by going here. You usually, on a rough calculation, if you sell the same premiums of call and put, that is easiest way to create a delta neutral strategy.
And how to adjust it automatically? As you tell us, delta
I will tell you. Yeah, it's a good question. Yes, how to adjust automatically, right? See, suppose where to adjust, when to adjust, I will tell you. Okay, so suppose if you have this strangle, sorry. Okay, if you have this strangle without buying, okay, you can just remove the buying. I showed only because buying. You can always buy the hedges for weekly, monthly, and leave it. If you are running straddle and strangle every day, you don't have to buy the hedges. You buy the hedges weekly so that it will cover for the whole week. You will save a lot of transaction charges, again, the brokerage, everything. Okay. Yeah. Joshi, you see here, this is 0.3 delta and 0.3 delta, you have sold it, right? So suppose if the market on Monday comes down, see, you have to adjust only when you are at this point.
okay.
Given point. So don't adjust the strangle without hitting your the given point. Or if you want to move the straddle, the thing is, I will tell you on Monday, say suppose if the market comes down by 1%. So you are already in a profit of 1,283. And if you feel that the market sentiment is going down by analyzing this, how to analyze the market trend, you can ask me. Okay, it's very simple. if it is crossing, see today, if it crossed the pivot and downward pivot as well, okay? So
Right.
this you can keep it as a stop loss, okay? You can 24,887. So you can just calculate this. Coming to option strategy builder, if market comes down on Monday to 24,600, you can just see here profit and loss. This option which you sold at 209 rupees has come to 299. Okay, it has come.
Right.
That means you have already gained 100 rupees here. And this option has gone up to 242. Now to do the adjustment, you have to look at the premium. Okay, either if you have money, you can leave this option as it is and sell a new option. Okay, so by that time you can just say you can just see again 0.3 delta or 242 rupees, whichever call option is having a 242 rupees premium. Okay, I will show you how you can automate that in the next class, because today in this class we'll learn only simple strangle, then we will go for adjusting in the algo. So you can look at the premiums here. See, maybe 25,000 call option, which is at 297, it might have come down to 242 or 24,900. Say suppose if it is 24,600, usually 24,900 call option, which was at 352, it might have fallen to 242. You can sell this or sell this. Now what happens? You see the magic. The strangle moves towards the whole downside. So you will get a range of minus 4.4%,
Wow.
25,423 on the upward side. Okay, if you don't cover this, you can cover this and do this. See, there are two ways. If you have margin, you can hold this because this will become zero anyhow, okay, or a period of time. To make it delta neutral, you should cover this and sell this option at 242. That will increase the downtrend. So this will move either way. Say suppose on the other scenario, if the Monday market is going up by 1% and you are in a delta neutral strategy of 0.3 and 0.3. Okay. So if market goes up, if you come here, so this option which you sold at 187 rupees has gone up by 248 rupees. Now the thing is you have to come and sell the nearest. You have to move this put side to here. If you sell this, it will go on the other side. You will get upper range 4.2% and you can cover this and sell this, and this triangle will move towards your upward direction. Got my point?
Yes, sir. Got the point.
Yeah, I will show you how to adjust this. See, while doing the adjustment, I will come to
Tomorrow.
create a conditions where if the call option put premium comes down by 50%, cover it and sell one more call options with different strike rate. That condition building will come to the next class, because
Okay.
we need to understand, because many are beginners here. So we need to make them clear first what exactly is the strangle and delta neutral strangle. Then adjustment is again, it's a beautiful game. When to adjust, I will come to that later as well.
Okay. Understood, sir. Thank you.
Right. So here let us see. For Bank Nifty, you can just create intraday straddles and strangles. Let's see how it has been working. Let me give a second. Okay. So for any bank nifty, let us create a strangle and see for intraday how it was been performing. Okay. So underlying we'll keep it cash. So entry time, as I told you, it is better to enter at 9:30. In between 9:20 to 9:30 is a good time to enter, so that the option like VIX spike is also will be done by 9:15, 9:17, 9:20. It will be done. Let's see if you are entering at 9:20 and exit at 3:15 in the evening. Okay. So for selling strangle, you can choose again the segments as option, how many lots you want to go for it. If you want to go for option sell, okay, call, you can just go for next weekly. Okay. Or if you want to do it intraday, you can go for weekly as well. First, let us do it for weekly. And coming to the strike rate, see if you want to, if you know what is OTM and ATM, that is fine. You can just sell OTM 400 points. Like OTM 4 is 400 points above. Okay. So strike rate, or if you want to go on premium basis without understanding the OTM 1, 2, 3, 4, you can choose premium based, closest premium of, say, suppose you can come and see here which options has OTM 0.3 delta will have a premium of 100 rupees. Okay, I will show you time basis strategy, multiple strangles, how you can turn time into a money machine. I'll tell you 9:15 to 9:30, 9:30 to 12:30, 12:30 or 2:30 to 3:30. You can create multiple strangles and enjoy the theta decay. It purely depends upon what kind of trader you are and how much risk you want to take. See, if you say 100 rupees premium, as it is very near, tomorrow is the expiry, the premiums are ultra low here. Okay, you are getting 100 rupees premium for OTM 4. See, 500, 600, 700, 800. So OTM 4. Okay, so that is how, if you sell, let's see with OTMs only. So let's see 400 points above, call sell, and here put sell. Okay, by 9:20 exactly, if you break this strategy, it will sell 2 lots of call option OTM 4 and 2 lots of put option. As I told you, after selling, it is very important either to keep a stop loss or you need to buy an entry. So let's keep a stop loss, because I don't want to take risk, because you know nowadays the options are very wild, movements are happening. So OTM 4, if you want to keep, you can always keep always in points or underlying percentage, okay, or percentage. So let's keep in percentage. So for usually for strangle, it is good to keep 30% of stop loss. On the option premium, it will calculate the premium percentage. Okay, let's see with 30% stop loss. That means if you sell OTM 4, okay, if you sell OTM 4, OTM 4 is 51,800. If you sell this, so 76 rupees, 8 threes are, you can calculate. So if it moves to 100 rupees, this will be squared off, or 51,200. If you sell this, if it goes to from 104, if it goes to 130, it will be squared off, or it will be keep reducing and you will enjoy the theta decay. And you can see if one stop loss is hit, say suppose if the call stop loss is hit. So what you can do is, here there is one more feature, as I was telling in the previous class as well, legwise settings, square off. You can completely square off the position if one stop loss is hit, or you can go for a partial with trailing the stop loss to break even. Okay, you can click this, so that, okay, if you have sold 100 rupees premium, and if one of the stop loss is hit, if call option moves to 130 rupees, this will trial the stop loss to the cost. That means By if one stop loss is already, you might have gained certain amount in the put option. Okay, so that will trial the stop loss so that you will not lose in put option as well. It will trial the stop loss to the break even. Break even is like if it again the put also comes to 100 rupees, it will cut off the loss and square it off. You can use this option, trailing the stop loss to break even of all the legs or stop loss leg. There are two other options. You can just place it, but I will choose all legs. If one stop loss is it, either of the call options, it will trial to the break even. Okay, you can keep take profit as well, but we will not take profit. We will run this till 315 and see what is the result. Okay, overall loss also you can just keep it by percentage, maximum loss by total premium percentage also you can keep it. So this we use it when it comes to risk reward ratio, like if it is risk reward, we will keep multiple legs. If you are going with multiple legs, you can go with 6 legs, because my strategy, you can see, I go on straddles, strangles, and long strangles all in one strategy. You don't have to have different strategies for different straddles and strangle. You can create multiple legs. You can create 10 legs, 12 leg strategies at one set, and you can execute it. At that point of time, we will use this overall strategy setting. For individual simple strangle, no need to bother. Let's see how it is working, and then we can optimize it. So let us see how it has been working from 2022 to 2024 till now. If you backtest, okay, so this is a OTM 4 strangle. We are backtesting in this. Let us see how it has been performing. Okay, so this is how the cumulative profit. Whenever there is a wild movement, you will not make profit. You should understand, whenever there is a sideways movement, your profit will keep increasing. And in the recent days, it is not performing because there is a volatile market. Let's see in detail. So the winning probability is 50%. The overall profit, okay, is 96,000. Number of trades is only 633. Average profit, average loss making percentage, winning trades, average it is 1,000, and average lose, it's not that great with overall 2-3 years with this triangle, because we are running it till the end. Let's see what is the reward to risk is 1.2, expectancy is 0.14. Okay, you can see the maximum drawdown here, it is 21,000. It's not good because we have not used any hedges. Okay, this is only a simple strangle. In the latest, in the recent one, if you can see by selling here both the option premiums. So you can just see here, we are trialing the stop loss to the cost. Okay, if this one stop loss is it, and the other, it is exited at cost. Again, the stop loss hit. Okay, it is trial to cost. Most of the time, it is not working. So the thing is, if you see this kind of strategy, you immediately have to change the parameters. I will tell you, you have to monitor the strategies. Sometimes only simple strategies will be performing well. You can just see here in okay, in 2022, many of the months it has worked. Here you can see in April, whenever there is a sideways movement, it will give wonderful results. Whenever there is a trendy market, you will lose heavily. So you can see here, sometimes when straddles and strangles were not working, I thought in a different way. You can just see here. Okay, so Bank Nifty, yes, 20%. So what happened? Lot of people came to option selling and they were selling at 920 and exiting with a stop loss of 20%. Like what I did was, like I sold a call option at the money call and put and I gave a condition to take profit at 20%. So that everyone is losing 20%. So here, if you take profit percentage at 20%, okay, I will show you the back tested results in 20. So you have to be different, because you cannot just stick on to one strategy for your lifetime. Okay, you should always know what strategy you are running, why you are running. Sometimes you might have seen I don't run the selling algos at all. So I run only the buying algos. Okay. So here you can see 2023, all the months, this has given very good returns, because all of them were making losses in this strategy, because with the that is where you will have a mixed review. Okay, if the market is 2023, all these months where people started coming to the market and started selling, they were losing with 20% of stop loss. That is where this strategy made very good profit with 20% of profit. Okay, the winning probability is 70%. Okay, so you can just see here 2023, all this 2022, it was doing good. So if you come to today's market, in some, as soon as you get 20%, the profit will be booked. So you can see here 20% profit, 20% profit. It sold at 394, covered at 315. You can just see the timing as well, 9:17. By 10 o'clock, your job is done, because at 10 o'clock, both the stop loss got hit, but you made profit here of 20%. So you think that the logic of this thing is, see, you forget about straddle and strangles. I will give you the most fine-tuned strategies. Okay, I have already done with adjustments where you can run that. The thing why I'm showing all these strategies is you should understand how to build the strategy. It's not only about getting a ready-made strategy. You should know how to think wisely, why your strategy is not working, what error it is making, or whether you should change any of the parameter. To know all these things, you should be keep testing the strategies and see the results where exactly it is working. See, if you take profit, few days it has been performing very well. Okay, 2,800 rupees, 1,200 rupees for every. And Thursdays or a day before the expiry, it is not good to keep stop loss of 20%, but you can keep take profit of 20%. You can just see here if you change any of the dates. See, earlier, both the actually expiry was on Thursday, but now it's different. So that is where the results will change. If you don't run it on Friday and Monday, okay, or if you don't run it, if you run this is Bank Nifty, right? Bank Nifty is on Wednesday. If you don't run it on Thursday, you will see different results. Okay, 73% probability. This is with S20%. Okay. In the meanwhile, you can create straddle and strangle in a same strategy. I will show you this 6-leg strategy. Okay. So where it is a straddle and strangle. You can just see here, I have chosen Bank Nifty as an index, the same 920 entry and 255 is the exit. Okay, I have not kept trailing the stop loss because I want to keep it open. So in this strategy, what I have done is, see, if you sell ATM, call and put, I am selling in leg 1, I am selling call option ATM, and in leg 2, put option ATM. And I have kept 20% as a stop loss. Because if you keep 20%, it will become trendy. Okay, because if call or put is broken and if you are Trailing the stop loss, you can use trailing the stop loss, or if you trail the stop loss to break even, this will become trendy because the call option, as soon as the market moves upward, the call option stop loss will be triggered and the put option will be keep trailing it to its cost, and you can trail the cost by 5 and 5% as well. Okay. So there are multiple ways. It's all about what your trading style, what exactly you want to have it. So you don't have to create separate strategy for strangle. You can create leg 3 for strangle. And strangle also, it's not only about 400 points up and down, any strike rate over and above OTM. You can sell, I'll explain it here itself. You can sell OTM 1, okay, OTM 3, okay. I have sold here OTM 1 also, OTM 1 call in leg 3 and kept 30% as a stop loss. Okay, for OTM 1, I have kept 30% as a stop loss. And OTM 3 also I have kept in leg 5, and leg 6 will be for call option. Call put, call put, call put. You can create straddle and strangle in the same strategy and have a stop loss individually as per your requirement. Okay. So usually OTM 1 and I have kept 30% strikers because it is moderately directional. Once you keep a stop loss of 20%, it will be a directional strangle. For OTM 1, I have kept it as 30% so that it is moderately directional. Okay. And OTM 3, I have kept it as 50% stop loss. Okay. So what happens? So if you want to re-enter, so Joshiji asked me about the adjustments, right? So sometimes what happens if like this in today's market, okay, Bank Nifty was wildly moving. Okay. So if the stop loss is hit, oh my God, today Bank Nifty was so volatile. And here, if you have gone for straddle, okay, so here the call option stop loss was hit and the put option was here. And again, see, that is where you can re-enter the position. If you see here, right, right. Today also, that's the reason even I removed the straddles, which was I took a manual control and I just exited with profit as soon as I got the decay here. यहाँ पे जब यहाँ पे हमारा स्टॉप लॉस हिट होके गड़बड़ हो गया, फिर यहाँ से यहाँ तक जब डीके मिला हम यहाँ पे कट कर दिया. सो आई जस्ट डोंट वांटेड टू, यहाँ से यहाँ पे डीके मिला तब रन करके निकाल देना है. इसीलिए स्टैंडर्ड एंड स्ट्रैंगल अभी पहले जैसा उतना इजी नहीं है, क्योंकि आप पिछले जमाने में देख सकते हो 2008 to 2000 कोविड तक इट वाज अ गोल्डन पीरियड फॉर स्ट्रैडल्स एंड स्ट्रैंगल. गोल्डन पीरियड, इट्स अ गोल्ड माइन आई कैन से. जस्ट मारो, पहले कितना मूव होता था मार्केट, 100 पॉइंट्स 200 पॉइंट्स, आपका जैसा नहीं था. सो अभी मार्केट जब चेंज होता है, हाँ चेंज नहीं होता है, इसीलिए तो ऑटो एडजस्टमेंट कर लो अभी. ओके अभी देखो यहाँ पे हमने री एंट्री एट कॉस्ट दिया है, यानी अगर फिर से कॉस्ट में आता है स्टॉप लॉस 20% स्टॉप लॉस बहुत नजदीक रहता है, ट्रिगर होके फिर से मार्केट रिवर्स हो रहा है, फिर से री एंट्री देगा. वो कितना बार देना है, वो 3 बार देना है या 2 बार देना है, आप यहाँ पे डिसाइड कर सकते हो. ठीक है, आप री एंट्री देने से क्या हो जाता है, फिर से डीके का फायदा मिलता है. जब भी आपको इतना स्ट्राइक मार के आता है, फिर से री एंट्री मार सकते हो आप, फिर से शॉर्ट करो, फिर से डीके मिलो. यहाँ पे भी कॉल ऑप्शन और पुट ऑप्शन. री एंट्री आप यू कैन यूज री एंट्री एट कॉस्ट. कॉस्ट का मतलब है यानी आपका अगर वही स्ट्राइक रेट में इट विल लुक, अगर आपका 200 रुपए का ऑप्शन 20% स्टॉप लॉस कितना हो गया, 240 में ट्रिगर हो गया. अगर वो 240 में जाके फिर से 200 रुपए में आ रहा है, सो इट विल सेल अगेन एट 200 एंड वेट फॉर द डीके. वही इसी प्रकार से पुट ऑप्शन में भी, इफ इट इज गोइंग टू 240 ट्रिगर, ओके 240 में फिर से आ गया तो फिर से सेल करेगा, फिर से वो स्ट्रैडल मेंटेन करेगा. ठीक है, ऐसा 2 बार करेगा, 2 बार करके फिर भी हाथ से निकल गया तो छोड़ दो. See, if you are not monitoring definitely the system, अगर आप खुद बैठ के कर रहे हो वैसे ही आपको हो जाएगा। सिस्टम को बता दो कि री एंट्री एट कॉस्ट में फिर से मारो, फिर से वेट करो, फिर से 2 बार करने के लिए हम इंस्ट्रक्शन देंगे, वो 2 बार कर देगा। ठीक है, ओटीएम 1 में अगर 30% स्टॉप लॉस हिट हुआ, री एंट्री एट कॉस्ट आप 2 बार दे सकते हो या 3 बार दे सकते हो। इट डिपेंड्स ऑफ व्हाट काइंड ऑफ ट्रेडर यू आर, कितने बार ट्रेड लेना है। यूजुअली बहुत ही कंजर्वेटिव करना अच्छा रहता है, 3 3 बार री एंट्री एट कॉस्ट। फिर आपको वो लॉस होके रिकवर होके नो लॉस पे आ जाएगा। फिर भी देखेंगे, ठीक है, मल्टीपल ट्रायल करने से आपको पता चलेगा कि मार्केट कौन सा टाइम में कितना दिया है, वो समझेंगे आप। OTM3 में 50% स्टॉप लॉस, री एंट्री एज सुन एज पॉसिबल, ओनली 1 टाइम फॉर OTM3। आई डोंट वांट टू एंटर, क्योंकि अभी फिर से 100 रुपए से 200 रुपए आके फिर से 100 रुपए आने तक हम वेट नहीं करेंगे। OTM3 को हम री एंट्री एज सुन एज पॉसिबल 1 टाइम रखेंगे। ओके, लेट अस सी दिस स्ट्रैडल एंड स्ट्रैंगल। आप कितना 2018 से देखेंगे कैसा करता है। Okay, you can back test it for 4 or 5 years. And one more thing, आप बैक टेस्ट से अच्छा फॉरवर्ड टेस्ट करो, क्योंकि बैक टेस्टेड विल गिव यू ओनली द ओल्ड डेटा का क्या हो सकता था। फॉरवर्ड टेस्टिंग में क्या होता है, आपको लाइव मार्केट में वर्चुअली ट्रेड करके दिखाएगा। ओनली 1 ईयर बैक टेस्टिंग, हाँ ठीक है, देखेंगे उसमें कैसे भी पूरा इसका दिखाएगा, उसमें हम इसी ईयर का ले लेंगे। So that's how you can create multiple straddles, strangles in one simple strategy. Okay, and you can exit it at any time. You don't have to run it till 2:55 or sometime. I will show you in the next class how actually you can create time based, and I will show you the results as well. It's been tremendous. Okay, it is taking much time for back testing क्योंकि हमने ज्यादा दे दिया। Okay, if you have been following, यहाँ पे देखो growth graph how it has been going. See, you can see here almost, as I told you, it was a golden period for 2020, 21, 2022. एक मंथ भी लॉस में नहीं गया है, ठीक है। ए मंथ में भी 2024 में जनवरी, फरवरी, मार्च में इट हैज गिवन सब गुड रिजल्ट्स, एंड या जून एंड जुलाई हिट हो गया, क्योंकि ये इवेंट बेस्ड था, वहां पे स्ट्रैडल स्ट्रैंगल काम नहीं करेगा। एज यू नो, हमको एक्चुअली बजट आया एंड और एक क्या इवेंट था, एंड इलेक्शन था। ओके, कभी कभी रशिया यूक्रेन वॉर का भी पहले जब विक्स ज्यादा था वो टाइम में भी यू विल हैव लॉट ऑफ इफेक्ट्स। यू कैन जस्ट सी हियर इन 2020 इट हैज गिवन 5 lakh। Okay, so the probability of winning here is 65%. Okay, the expectancy ratio is 0.5. Good. You would have made, if you have run this strategy with one lot, you would have made 13,47,000. Number of trades kitna hai, probability kitna hai. You can just see all the trades for how it has been taking from 2018. 2018 में नहीं चाहिए हमको, तब विक्स कितना था, 13, 14, 15, how it was like when VIX was high, take a 2018 में, will come to last year. Okay, आज का मार्केट में देखो लॉस ही हुआ है, क्योंकि आज तो आप देखे होंगे कि कितना 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 सेल फिर से कॉस्ट में मार के सब, बट हियर इट हैज मेड गुड प्रॉफिट विथ दिस कॉल ऑप्शन, मे बी या पुट ऑप्शन जो सेल हुआ फिर से it has sold at 238 and it has made 2,500 per day, but net it was, हमने कितना लॉट बाई किया है, कितना लॉट सेल किया है, आप यहाँ पे देख सकते हो। 920 it is taking entry, and it is a continuous process. You can, there are a lot of legs here, leg पूरा leg 6 है, 6 legs है, री एंट्री भी हुआ है, और यहाँ पे देखेंगे आज का 920 में एग्जिट हुआ, 933 में एग्जिट हो गया एट द कॉस्ट, क्योंकि यहाँ पे स्टॉप लॉस हिट हुआ, इमीडिएटली पुट का स्टॉप लॉस हिट हुआ, इसीलिए कॉल का जो है वो ट्रायलिंग द स्टॉप लॉस टू कॉस्ट रखा था हमने, तो ट्रायल करके वो जो हुआ था उसको सेल हो गया। फिर से यहाँ पे हम देखेंगे, यहाँ पे 51,500 का कॉल, इट हैज सोल्ड इट, एंड वो भी कॉस्ट में, क्योंकि इसका स्टॉप लॉस हिट हो गया। सो आज का तो पूरा स्टॉप लॉस हिट हुआ है। You can just see again it has re-entered many a times. You can just see here 51,400 का फिर से 280 में, 280.9 में जब स्टॉप लॉस हिट हुआ, ओके, फिर से सेल किया, फिर से स्टॉप लॉस हिट हुआ। सो समटाइम्स इट इज नॉट गुड टू री एंटर विद दिस विक्स, ठीक है, क्योंकि विक्स बहुत ही लो था, एंड that's why I suggest not to go with re-entry as soon as possible with re-entry at this kind of market. If it is market is very constantly on a sideways, especially when it is in pivot. Pivot में जब रहता है, so you can just wide range pivot. Okay, so that is where I'll show you here. So whenever the pivot is narrow, okay, CPR, we can call it as. Usually ये CPR का आप रेंज लेके यहाँ पे कॉल और यहाँ पे पुट सेल करना है. Usually in this market you can go for a strangle with if you have a CPR. मैं वो भी आपको सिखाऊंगा कि CPR बेस करके आपको straddle and strangle कैसा कर सकते हैं. If CPR range is true or false, you can give all the conditions. ठीक है? I just want you to understand the basics first, then we will move into the advanced strategies. Okay, this all strategy is just to make you understand what system can do. Okay, what real algos, how actually it will perform profitable algos, I will show you one by one in the later class. Okay, so you can just see here with all these results, there are multiple trades here. I don't think this strategy should be deployed here. Okay, that's why I made this for straddle and strangle, because in this year I just wanted to capture, this is a very old strategy. Okay, when the market was behaving in these months, I just wanted to deploy this, and I deployed it. And now I am not deploying this strategy. I am deploying some other strategies which are giving good results. And you don't have to run it. As I told you, straddle and strangle can be cut off. Isko, if you are not continuing, if you are squaring it off at 12:30, okay, and see. इसको एक ही साल में करेंगे. You can compare the back test as well if you want to. Okay. Let's run this with 2024. Okay, except these 2 months, you can see here, it has given good. The 56% is the probability, and it has cut down. It is not taking much of the entry, as we have restricted the time to how much is still 14:55. How I just changed the time. Actually, you can change if you want to exit at 12:30 itself. You'll have different results. And if you don't want to re-enter and re-execute, it's not required most of the time. So what if you are running it only for 2 hours? Okay, 9:20, 10:20, 11, 3 hours maybe. Okay, here you will have different results. Okay, most of the time in these days, it's going in loss. 404 at the money with 20% stop loss. So, आजकल बहुत ही stop loss hit हो रहा है. So we will not run this strategy this time. So that's how you should know. You cannot blame the strategy once it is built if it is not working in any of the time. you have to change those parameters. Okay, this is Bank Nifty straddle. I am usually deploying Bank Nifty. Where is that? My live deployment here. Okay, I'm using this actually. I am selling put and call with 350 rupees premium and keeping 50% of stop loss, trailing the stop loss by 5%. Only this one, and 150 rupees premium with 32% stop loss and trailing the stop loss to 5. And I am buying the hedges of 5 rupees premium and 5 rupees premium. Okay. Abhi leg one mein I will show you what is this. Leg one mein I am selling put 350 rupees premium based. Okay, and I'm keeping it as 30%. You can change if you, it's nothing but OTM1. Okay, if you see 350 rupees premium, it is sometimes it is at the money and sometimes it is out the money, you know, right? When the VIX is high, it will be at out the money, and the VIX is low, it will be at the money. You can choose your premium, or you can just run only 150 rupees premium, which is a delta neutral strategy. You can just keep 32%, 32%. I have been इसको forward test किया था. It has given an excellent results. Okay. इसको भी so excellent result कैसा देता है मैं बताता हूँ, क्योंकि if you completely don't rely on back tested data is only for your reference, whether it is how it is working. When it comes to straddle and strangle, my personal experience, I usually take manual control in between and exit the position most of the time, because I know see, I don't give a market to chance. We cannot define everything to the system. Sometimes when you are getting a good result within a span of 1 hour or 2 hours, it is better to cover it up. That option is still not available in the algorithms. That will become more complicated if we keep giving. Okay, so you can just see here with 350, if you exit at, what do you say, we are exiting at 1510. Okay, if you run this still, okay, right. आप यहाँ पे देख सकते हो अप्रैल और मंथ में, जनवरी में विथ वन लॉट इट इज गिविंग गुड वन. यार आज का देखेंगे क्या किया है इसमें आज का. तो आज का लॉस ही हुआ है, क्योंकि मैंने बता रहा था पूरा, इसीलिए मैंने. आज क्या हुआ देखो, 330 में दोनों स्टॉप लॉस हिट हो गया. यहाँ पे भी दोनों स्टॉप लॉस है, आप यहाँ पे देख सकते हो 158 हमारा रियल टाइम में स्टॉप लॉस हिट हुआ है यहाँ पे. जस्ट सी, या देखो आज मैंने ये स्ट्रेटेजी डाला था, इट सोल्ड एट, हाँ ये दोनों तो प्रॉफिट में आ गए, 350 वाला. सो इट सोल्ड 400 रुपीज प्रीमियम, 320 रुपीज प्रीमियम, ये दोनों तो प्रॉफिट में आ गया. मगर फिर से ये दोनों जो था वो लॉस में चला गया. उसके बाद मैंने यहाँ पे ये दोनों हिट होते ही आई टुक अ मैनुअल कंट्रोल में लेके ये दोनों को चलाया, and then we got exited. And Nifty, you can just see it. Nifty was same, where it was sold at 66 rupees. Yeah, in the morning, 24,750. And yeah, मैं actually इस Nifty में strangle मारता हूँ, straddle नहीं है. So I sold a call option of 24,950. It is an algo. I didn't do it. So it is an algo. It sold at 66 and it was stop loss was triggered. But the put option, which was sold at 71, it got triggered at 37, which made a profit. Okay. So इसीलिए straddle and strangle में आजकल क्या हो रहा है? So you should be very careful with the stop loss. Many of the times, if you are getting around 0.5% to 0.6%, you just exit it out. Or in the next class, I will show you how to create a strangle for half an hour, 1 hour, and 2 hours as well, which is most क्या प्रॉफिटेबल है वो क्वांटमैन में यहाँ पे तो री एंट्री एज सुन एज पॉसिबल और कॉस्ट में ही है एंड विद डिफरेंट कंडीशंस वी कैन यूज इट इन क्वांटमैन इन द नेक्स्ट क्लास विल कवर दैट एनी क्वेश्चंस टिल नाउ आई होप एवरीवन फॉल is following
Yes.
okay so ठीक है आज के लिए I think many of you understood about the option Greeks क्या है VIX क्या है implied volatility क्या होता है how option prices changes everything straddle and strangle in the next class I will show you how you can build adjustment straddles and I will show you one buying strategies also where you can integrate any of your technical indicators and how to create an adjusting strangle okay so any questions guys let us see हम कहाँ पे जा रहे हैं मार्केट एक बार लास्ट 1 आवर में सेलिंग आ गया है बैंक निफ्टी एंड पिवट से नीचे है सो अवॉइड लॉन्ग्स गाइस फॉर टुमारो you should go long only above 51,700 the bank nifty and for nifty also it is still in buy okay but it is in pivot we can buy only above 930 24,930 के ऊपर ही बाय करना है अदरवाइज ये साइडवेज जाने वाला है अभी थोड़ा दिन तो अभी आई थिंक it will be in a range of 24,700 to 25,000 let's see अभी 2 दिन में एक्सपायरी भी है if this breaks this is 1 hour graph okay it's time up now I think if there are no questions we'll just wind up we'll see on Thursday on Thursday I will come up with a wonderful strategy which is into buying I'll show you how you can create with more than 90% probability strategies
And delta neutral also.
yeah delta neutral how you can continuously be in a straddle and strangle in an intraday as well okay okay then see you guys if there are no questions we'll just wind up
Okay, sir. Good night. Very nice and extremely intelligent learning. Thank you.
okay okay I will send this recording as well once the class is completed I'll send it if someone wants to recollect we can do that they can watch okay stop sharing
Okay, sir. Thank you.
okay Basraj, okay bye
Good night.
bye bye